In China, difficulties regarding cash withdrawals and money transfers at small local banks have long become the norm. But now, such issues are also affecting customers at some of the country's major state-owned banks. A Bank of China customer found they were unable to make transfers from their card after transferring money to their Hong Kong account. When the branch could not identify a specific reason for this, staff offered various explanations, such as frequent transfers, despite bank statements showing only 2 or 3 transactions a month. When the customer explained that the funds transferred to a Hong Kong account were for travel expenses, the bank immediately requested invoice proof. The customer expressed frustration over his experience with the Bank of China.
I find this Bank of China truly appalling. It's a disgrace to the name Bank of China. It's unbelievable what you are capable of doing. You restrict me from transferring money to myself, and that too without any reason given, even when my currency exchange and transfers are all within the limits. What's worse, this restriction cannot be lifted, meaning I have to permanently go to the bank's customer service whenever I need to transfer money. The branch staff told me I'd always need certain documents for transactions, as long as I could prove the money's source and that it was a transfer to myself, but it turns out no matter what I say, it's useless.
A video showing a customer limited to withdrawing 1,000 yuan at the Agricultural Bank of China garnered widespread attention.
Why do you limit me to 1,000 yuan just because I come from another city? What's the reason?
Oh, it's because of our policy. In recent years, please don't record this, okay? If you record, I won't continue.
Well, tell me, which law allows you to limit me to using only 1,000 yuan a day? What can 1,000 yuan even do?
It's not me who decides, it's automatically set by the system.
Why would the system set it like that? Which law allows you to impose a daily limit of 1,000 yuan? Just explain to me clearly, and I'll stop recording.
The bank staff inquired about the customer's place of work and residence, but failed to provide a convincing reason for the restriction. The reason was later stated to be due to infrequent card use. Industry experts believe that placing limits on cards from other cities may be a way to stop businesses from financial loss or to help manage financial risks within the bank. Banks indeed impose various restrictions on accounts they deem suspicious, such as disabling online banking and ATM withdrawals and setting limits on online payment amounts. Cards not used for a long period can be limited, frozen, or even closed, especially for individuals with multiple accounts at the same bank or in regions with a high risk of telecommunication fraud. In summary, banks may deem an account suspicious, and proving one's innocence may not always be effective. On March 1st, a Weibo user complained that the expenditures for a gold card from China Construction Bank that was regularly used was suddenly limited. Attempts to resolve the issue at a branch were unsuccessful, leading to numerous complaint calls from this customer. A customer service manager explained that the heightened regulations of the People's Bank of China led to the implementation of a model that analyzes card transactions over a period of time. It will then set transaction limits accordingly. For example, if transactions on a card were consistently in the thousands or tens of thousands, the system would automatically set a daily limit of no more than 20,000 yuan. The user added that to increase the spending limit on his card, a visit to the branch along with the submission of various documents, including property ownership certificates, Social Security, and Housing Provident Fund records were required. The manager mentioned that even there, the workers of the bank, cards were limited to 5,000 yuan. This news sparked heated discussion both within China and internationally. During the time of the new year, a customer attempting to transfer 100,000 yuan using China Construction Bank's mobile banking app found they could only transfer 50,000 yuan. Upon inquiring at a bank branch, the customer was told being able to transfer 50,000 yuan in a day was already commendable, and to remove the limit they would need to visit the branch where the account was opened. Some have shared that it's not just China Construction Bank that has issues with spending and transfer limits. Similar restrictions are reported across all banks. For instance, some Agricultural Bank of China customers can only withdraw 500 yuan daily. According to bank customers, the bank does not pre-inform them of these restrictions, leaving them to discover the restriction only when attempting to withdraw funds. It seems almost every citizen has encountered limits on their bank cards. One ex-user has bluntly stated that the real reason for these restrictions is the bank's lack of funds. Limiting customers' withdrawals is a measure to prevent a run on the banks. Statements like these are suggesting that the bank's financial system is possibly on the brink of collapse. Another user offered a more detailed analysis, suggesting that the underlying issue is the bankruptcy of local government financing vehicles. As banks have to cover these losses, it leads to imposed withdrawal limits. Many people are advising to withdraw funds from banks and convert them into Bitcoin as a means of protection. In fear that the banks may confiscate their funds, they suggest that further delays from doing so could result in the loss of deposits. A video blogger with a touch of bitter humor has voiced the pain of customers facing withdrawal limits.
You are only allowed to use 100 yuan a day or limit withdrawals to 1,000 yuan per day. But people have their expenditures, like school fees for their children, pension money for the elderly, or hospital and surgery bills. Along with those mentioned, there might be other family expenses. Allowing only 100 or 1,000 yuan a day isn't enough and is causing a lot of inconvenience. So, in such situations, people turn to the bank's customer service, but the staff start by interrogating and looking at those with inquiries as if they were criminals, asking if the customers are local, why they are getting a card here if they're not, what kind of funds are in their card, asking for months of transaction history to explain the situation. Additionally, documents are required for further verification. With all this questioning, many feel they're being treated like criminals for no reason.
Since the Evergrande debt crisis, experts have commented that China's real estate has gradually morphed into a banking crisis. There is a continuous risk of citizens' savings potentially vanishing overnight. The Chinese banking system, described as riddled with flaws, is close to a crisis that could be triggered if everyone rushed to withdraw their funds simultaneously. Difficulty in withdrawing cash and transaction limits on bank cards have been occurring across China. On October 10, 2020, the Chinese government started a countrywide effort known as the Card Breaking Campaign. This campaign was aimed at tackling new forms of telecommunication and online crimes by focusing on suspicious accounts for the cleaning of accounts and then enforcing restrictions on these accounts. Previously, this strategy was mostly used by private banks, but it has now been embraced by state-owned banks too. But the justifications provided for this practice are scarcely persuasive, rendering the scenario comparable to a form of legal theft. Despite the vigorous card-breaking campaign, online fraud has not only been diminished but has been intensified, and no significant cases of corruption or financial industry loopholes have been addressed. Essentially, these actions and cash withdrawal restrictions have mostly affected the regular citizens of the nation. On January 19, 2022, the People's Bank of China and regulatory bodies introduced rules mandating strict identity checks and detailed verification of customers for cash transactions exceeding 50,000 yuan or 10,000 US dollars. This strict verification process can be challenging for customers unfamiliar with banking procedures. Many individuals are unable to withdraw funds even when they have valid identification. There have also been cases of customers being informed that their substantial deposits were either non-existent, transferred, or donated away. These measures appear to be primarily designed to restrict withdrawals, which are potentially freezing or seizing deposits. From March 2022, banks began verifying the purpose of withdrawals over 50,000 yuan. The series of mandated procedures for assessing individuals' financial assets increases the chances of refusal of access to these funds. This essentially implies that once your money is in the bank, it might not truly be yours. So are banks aiming to combat illegal deposits, or are they making it difficult for the public to access their own money? Are they protecting customers from financial fraud, or using this as an opportunity to covertly expropriate funds? On November 2021, the People's Bank of China announced that the card-breaking action led to the cleanup of 1.48 billion suspicious bank cards, affecting potentially hundreds of millions of account holders. These regulations and actions, which according to experts are lacking heavily in legal basis and blatantly infringing on depositor rights, have caused distress among the populace of mainland China. Many have seen their life savings vanish overnight. For instance, after a bank failure in Henan, a 50-year-old woman lost her life savings of 600,000 yuan. This had resulted in almost immediate blindness in her left eye due to stress. Another man, aged 47, was utterly devastated after seeing his life savings of 40 million yuan disappear. Bank customer services in China are now particularly time-consuming. Customer dissatisfaction is increasing, with some banks limiting services to only 40 customers per day, along with the inconsistent functioning of ATMs. The bank's responses are often unconvincing. Many suspect that they are deliberately limiting withdrawals. Such restrictions only cause more customers to rush to withdraw funds, as seen in Shanghai, where long queues form daily outside multiple banks. Some elderly individuals arrive as early as 2 a.m., bringing stools to sit outside the bank and wait for a number, only to find that the day's slots might already be filled. This situation is reminiscent of the pre-collapse of the Soviet Union, where people queued for bread. These situations have drawn sharp criticism from many, who accuse Chinese banks of self-destructive behavior.
Telling me I can only withdraw 1,000 yuan each time is ridiculous. What if I urgently need money? What can 1,000 yuan even do? What if someone in the hospital urgently needs money? Who's responsible for this? The bank is sabotaging itself. Do you realize that? The bank had a good reputation, and for many years, people trusted it for depositing and withdrawing money reliably. But now, step by step, they're heading towards self-destruction.
The root cause of these banking practices is attributed to the actions of the Chinese Communist Party, CCP. The current regime exhibits many contradictory behaviors, on one hand lamenting the public's preference to save rather than spend, while on the other aggressively limiting bank card expenditure. Experts suggest that the former stems from the economic hardships faced by the Chinese people, deterring consumption and undermining the CCP's economic strategy of internal circulation, meaning prioritizing domestic consumption. The latter issue is more severe, with local government debt becoming so substantial that many local authorities are now bankrupt. According to data from the Shanghai Commercial Paper Exchange released in August 2023, by July 31, 2023, there were over 2,800 instances of commercial bill acceptors defaulting. This is an approximate 80% increase from that in January. Among these defaulters, 271 were branches of state-owned and local urban and rural commercial banks. The default count increased by 239 from June to July, a 356% month-over-month increase. Of the 271 banking branches involved in bank defaults, 167 belonged to China's 5 major state-owned banks. The remaining 104 were primarily at-risk urban and rural commercial banks, along with a few joint stock and foreign bank branches. This highlights that China's credit risk has spread from real estate and investment financing platforms to the banking system. Several of China's top banks have fallen into a credit crisis, with the 4 major state-owned banks reporting a total of $164.8 billion in non-performing loans in the first half of 2023, a 7.6% increase from the end of 2022. Non-performing loans in the construction sector among these banks rose by 10% to 30%, with real estate loans also increasing by 12% to 18% for all but the Bank of China, which saw a decrease. For years, local governments had supported urban development throughout off-balance sheet financing, which has led to the local government debt accounting for 45% of GDP. If these are included in China's total government debt, it would project a total debt-to-GDP ratio of 149% by 2027. The crisis in the real estate market has caused a drop in the income from land sales, which was a key way to pay off debts. This situation poses problems for Chinese banks, which are responsible for 80% of these local debts. The International Monetary Fund, IMF, estimates that just half of the debt restructuring costs have resulted in Chinese banks incurring a loss of $465 billion. This figure surpasses the estimated actual usable foreign exchange reserves of China, which experts and official data suggest would not exceed $400 billion. These events highlight the severe liquidity crisis faced by Chinese banks. Sacrificing the interests of the populace to maintain its rule, the CCP has historically resorted to freezing bank deposits as a means of ensuring its survival. Before 1978, the CCP had frozen bank deposits on 4 major occasions. 1. In November 1950, following the deployment of troops to the Korean Peninsula, the CCP ordered the freezing of deposits from government institutions, military units, and organizations for 1 month to alleviate the inflation caused by the panic buying of materials. 2. In December 1960, following the Great Leap Forward, the CCP, which was already facing a fiscal deficit of nearly 17 billion yuan, continued to issue more currency. To address the inflation that followed, customers' deposits were frozen and large sums of money and assets were confiscated under the parity of the funds being from irregular sources. Number 3. In February 1968, the fiscal deficit that occurred amidst the chaos of the Cultural Revolution, approximately 7.9 billion yuan in deposits were frozen nationwide. Number 4. In October 1976, 10 years of the Cultural Revolution had nearly bankrupted China's finances. This prompted the CCP to freeze bank deposits for the 4th time. These instances show that whenever economic problems threaten the political status quo due to the failure of introduced policies, the CCP would prohibit withdrawals. By directly confiscating private assets, the CCP are reverting to more coercive tactics. The 2022 financial crisis involving many rural banks in Henan resulted in the freezing of deposits affecting hundreds of thousands of account holders and involving more than 40 billion yuan, which remains unresolved. Over a year later, victims seeking redress face suppression. Experts suggest that these instances demonstrate how, in response to internal corruption or economic challenges that deplete state resources, the government may implement measures that effectively transfer the financial burden of its shortcomings onto the citizens. This approach can significantly impact the populace, requiring them to absorb the consequences of fiscal mismanagement without addressing their concerns directly. The more critical the situation, the more challenges in governance become more apparent. This indicates that as long as the current administrative structure of the CCP remains, there will be ongoing challenges for the population.